Welcome to PizzaGarden Podcasts. This is the PizzaGarden Micro Show. This is episode 1. Thank you all for tuning in. I had originally recorded a podcast this morning on 5/28/2019 at around 9:30 in the morning, and the stock markets were up today. However, when I went to upload the podcast around midday, YouTube wouldn't save some settings or some bullshit, and I ended up not uploading the original podcast I had recorded. I'd pulled up the consumer sentiment numbers, and I was going off about that because we hadn't had the biggest news story of the day. And I can't remember who said it, but I swear the news cycle nowadays takes place over the span of an hour, thanks to, quote, the world's greatest negotiator, Donald J. Trump. You know, the stocks were up in the morning, and about an hour and a half before the close, he goes off yapping about some shit about the about a negative outturn to a trade war. And the market sells off. Within 90 minutes, the S&P 500 down 23 points. The Dow Jones Industrials getting hit 237 points. The Nasdaq down 29.6 and the Russell 2000 down 11. The volatility index closed at 18. It seems like people are quick as shit to run on simple news headlines. You know, the whole market was being propped up for 320 some odd days, this whole fucking trade war, on trade war optimism headlines. Good hopes headed for Trump and Jinping, but fucking no. And it's going to affect us. The Consumer Price Index came out earlier this month, and we were forecasting 0.2% increase and we got 0.1. For some reason, that's a bad fucking thing. That prices only went up 0.1%, and we're not hitting 2% inflation, that the dollar's not losing 2% of its purchasing power every year. U.S. existing home sales, we got those numbers a week ago. Those numbers came in lower than expected. We were expecting 5.35 million. We got 5.19 million for existing home sales. U.S. housing starts are going, I don't know what it's going to do. Housing starts. We're just low. We're low. And I don't understand how the consumer sentiment number that comes in at 134 above the consensus of 130 had anything to do with the stock market rising this morning. Why anybody's buying anything is absolutely beyond me. The U.S. house price index is headed for a fall. The U.S. year-over-year house price index is looking like it's going to take a turn for the worst. We get non-farm payrolls for the month of June, so expect podcasts later this week regarding the non-farm payrolls on Jobs Friday. Our forecast for the month of May is an added 190,000 jobs, up from April's 263,000. We've had unexpected peaks in January and April. And we even had a revision to tell us that there was nothing else gonna come. Are we really hyping up the markets on repeating jobs reports? February's month tanked. We only increased 20,000 jobs. It was revised upwards to 33,000. Eventually, it's gonna stop going up. U.S. retail sales is going to be a major problem. We're getting the May numbers here next month on the 15th at forecasted 0.2%, with last month coming in at minus 0.2%. March, we saw our spike to 1.7%, revised up from 1.6 first reported. February was at minus 0.2, January was at 0.2, and over the December holidays on Christmas, and thank God the government was shut down so we didn't get to see a minus 1.2% month-over-month retail sales number come in. Gas and autos, we are far worse than what we really think. And that's just because the consumer hasn't tapped out their credit yet. If there's any evidence that we're close, it is in gas and autos, as well as retail sales. Why we're letting the purchasing power of our dollar fall, thanks to bureaucrats picking interest rates out of a fucking hat, is absolutely disgusting. Not to mention where interest rates would go. Now, if the Fed funds rate fell back to 0%, which I personally think it's going to do, then what's going to happen is we're going to see the first fall in the 30-year Treasury in mortgage rates. It's going to be impossible to dump these treasuries that the federal government is going to be taking in. We're going to have to be selling treasuries that we're taking in order to pay off our debt. So it's absolutely useless what to do. Quantitative easing is just going to debase the value of the dollar. And you could look at any scarcity chart, any supply and demand chart. We're not allowing the market to clear our dollars. We've already started quantitative easing. Just look at the U.S. national debt clock. And if you need a reason to be bullish on gold, according to the U.S. national debt clock, for every ounce of gold, there is $4,831 in circulation. And the price of gold is sitting at 3.9, no, just sitting at 25.2% of that. The dollar index was still up today amongst the trade war, coming in at 97.86. Gold saw a price up of about $5.85. Now $6 as I'm recording this at 1283.05. Silver up 0.4%, having a similar move to gold to 14.37. All of these are very, very bearish indicators for the United States economy. And it is the mission of the PizzaGarden Podcasts to let this information be known, because people like us are bad for television. You're not gonna find an opinion like this anywhere else than the PizzaGarden Podcasts. I appreciate you all for tuning in. Please check out the PizzaGarden Macro Show for my perspective on broader markets, as well as stocks, bonds, ETFs, cryptocurrencies, and precious metals. I also have Your Slice of the Pie that is coming out tomorrow. That is my personal finance show. I also have the 2 Drink Minimum podcasts for those who would like to take their minds off of all the commotion and volatility that is the Trump administration and the stock markets that we are in today. And you can follow me on Twitter at PizzaGarden's Economics. Thank you. Good fucking night.